Hello and welcome to the Scan the Markets live webinar with myself, David Madden. I'm a market analyst at Equity Capital, and Equity Capital is a part of the overall equity group, which includes other companies such as Equity Nigeria and also FX Pesa in Kenya. For those of you if you've not been to one of these events before, what I'll do is I'll run through about 5 charts talking about the price action that we're seeing on screen, look at it from a charting point of view. I'll also be discussing the fundamental analysis, the fundamental news which has been going on, which has been driving the markets. I'll cover about 5 markets in that regards, and then afterwards, at the end of my analysis of the various charts, I'll then kind of throw it open to questions. So any questions you have, or any questions you have, or any markets that I haven't covered that you'd like me to take a look at, feel free to just ask away. If you do have a question about the topic I'm speaking with then and there, feel free to just ask and say, "Stop, David, I don't understand that. Would you mind going back over that?" I'm happy to explain. But if you have any questions relating to anything I'm covering, anything outside of what I'm covering, or any markets you want me to take a look at, I'd appreciate it if you please save those to the end. So starting off with GBP USD, the pound versus the US dollar. It's been a very, very busy 24 hours for the currency markets, for stock markets as well, but particularly currencies. So to kind of recap from yesterday, from almost 24 hours ago, the US Central Bank, the Federal Reserve, they hiked interest rates by 50 basis points, 0.5%, meeting expectations. But it was very much signaled that they were going to hike by 50 basis points. So nothing was a surprise there. Now what they've also did was they said they're going to be reducing the size of their balance sheet. From June onwards, they start to reduce it by $47.5 billion per month. Now, going into the meeting, there was talk we might see up to $95 billion per month in balance sheet reductions. So in that regard, it wasn't as hawkish as originally predicted. To be fair, the Fed said we'll start off by reducing the balance sheet by $47.5 billion per month. We'll then ramp that up to $90 billion after 3 months. So they ramp it up to $95 billion after 3 months. So they will get to the $95 billion mark, which economists were predicting. But after a few months, overall, the message from the Federal Reserve was that it was a reasonably hawkish update. So in a sense of tightening monetary policy, they obviously hiked by 50 basis points. They announced plans to start reducing the size of the balance sheet. The balance sheet reductions wasn't as large as originally predicted, and the overall message from the Fed wasn't as hawkish. They didn't give off the impression that they're going to be on a regular basis having large interest rate hikes, and with that, what we saw was a large decline in the US dollar. This is the decline that we saw in the US dollar is reflected here in the sharp upward move by GBP USD. But since then, about 7 hours ago, we heard from the Bank of England, the UK central bank, who hiked interest rates by 25 basis points, 0.25%, meeting expectations. But the Bank of England also predicted that next year, the UK economy, instead of growing by 1.25%, its original growth prediction is going to contract by 0.25%. So they're all automatically factoring in negative growth, marginal, but still nonetheless negative growth for next year. So with that, we saw a sharp move lower in the British pound. And what really kind of makes matters worse is that today's interest rate hike was the 4th interest rate hike by the Bank of England since December last year. So we're in a scenario whereby they can already foresee demand diminishing because of the cost of living crisis, various different issues in relation to the post-pandemic boom is already kind of beginning to fizzle out. Inflation's at a 30-year high. We've had a number of interest rate hikes. We've had another interest rate hike today. We possibly will have further interest rate hikes from the Bank of England later this year. So when you put all together, it really does kind of spell a negative situation for the British economy. If people are already suffering from increasing cost of living, 4 interest rate hikes in 4 or 5 months, it's only really kind of compound the issue. So we saw a sharp move to the downside in GBP USD. What's quite remarkable was the fact that the losses that we witnessed in GBP USD in the last few hours managed to actually take out the losses of last week. So we've actually got to fall into a new, I believe it's as a multi-year low, or yes, I believe it's about a almost 2-year low on GBP USD that has been set in the last few hours as a result of the kind of the negative growth warning from the Bank of England. So if you look at the MACD indicator here, which is this histogram here, we can see these red bars here. This is a measure of momentum. Momentum is in negative territory, indicating that the bears are in control. Just to let you know, that the time frame I'm looking at here is a 4-hour chart. All the charts I've been looking at are 4-hour charts. The moving averages that I have on screen here, this moving average here is a 20-period moving average. This here is a 50-period moving average, and this here is the 100-period moving average. While GBP USD continues to hold below all three of these simple moving averages, it's likely the recent bearish trend, downward trend, will continue. Moving lower from here, we could target one spot 23.00. Going below that, we could target one spot 22.00, and then the next big level to watch out for will, of course, be one spot 20.00. Now, it is worth noting, though, that we have seen a bit of rebound in price in the last few hours. If you're looking at the RSI, the relative strength index here, essentially kind of measures the kind of the rate of change of a market. We can see that is off its recent lows and it appears to be turning around. If GBP USD can hold above the lows that were set in the last few hours, it's possible we might see a bit of a rebound, a bit of a snapback. And if we do, where can we target? Well, the first obvious area to potential, the first area to check out for as a potential area of resistance, if we do see an upward move, could be this peak here, the peak that was set last night in the wake of the Federal Reserve meeting, and that comes into play in around one spot 26.37, and a break above that could see a target one spot 27.71. Looking here at the UK 100, the UK 100, the FTSE 100. I've seen a lot of volatility in the past 24 hours as well. Yesterday, we saw an upward move in stock markets across the board for reasons laid out here. The Fed were less hawkish than expected. A lot of the stock markets in the last few days and weeks came under pressure because they thought the Federal Reserve not only would hike interest rates by 50 basis points, they'll also issue a very hawkish update. And with that, when the update wasn't as hawkish as expected, we saw a move to the upside in the US stocks, but also in UK markets. So we saw a spike in the UK 100 yesterday. Today's warning, though, was a bit of a double whammy. We saw a spike in volatility for the UK 100. Although we saw a sharp decline in the value of the British pound, which typically assists the UK 100, the FTSE 100, just the very fact that the Bank of England cautioned the UK economy could have negative growth next year, that really just kind of sours sentiment across the board. So we have seen a lot of volatility in the past 24 hours. We saw a spike yesterday in the wake of the Fed, and now we kind of fallen back to like a multi-day low as a result of the Bank of England's kind of harsh warning. So we could see here that the UK 100 is off its recent lows, but it's still holding below these three simple moving averages. And what it continues to hold below these three moving averages, it's like the very short-term downward trend will continue. Moving lower from here, if you break below the most recent lows that were set in the last few hours, we could look to target this level here at 73.94, and a break below that could see it back down towards the lows of late April, just shy of 7,300. Now, even though we have been moving lower in the last few hours, it's worth noting that the more medium-term trend for the UK 100 has been higher. So just to very briefly just draw a chart in here, a line here. We have to kind of just draw a crude trend line here. We could see this price action going on here. And I've drew a trend line here using this icon here. So we can draw a trend line. So you can see it there, trend line, it shows up when you hover the icon, when you hover the mouse over the icon, you can see there it shows up as trend line. A tentative trend line is a trend line with 2 points. A confirmed trend line is a trend line with 3 points. So we can see here that on these all three of these occasions here, these points along here acted as a support area for the UK 100. So even though the very short term we've been moving lower, while we continue to hold above this trend line here, it's likely that our medium term upward trend will continue. Should that be the case, where can we go from here? Well, we could look to retest the highs of early April in around 76, 72, and a break beyond that could see a target 77.00. Take a look now at the AUD USD. So what we've seen in the last 24, 48 hours, once again, a lot of volatility in this currency pair. On the early hours of Tuesday morning, the Reserve Bank of Australia hiked interest rates. It was the first interest rate hike in Australia since 2009. So it really kind of speaks to how hawkish the Reserve Bank of Australia is. It's also worth noting, only in November last year, about 6 months ago, the Reserve Bank of Australia were signaling that we may not see an interest rate hike until 2024. And lo and behold, they were essentially saying interest rate mightn't be hiked for 2 years. And lo and behold, they ended up hiking interest rates about 6 months later. So that really kind of highlights how quickly things have changed in Australia. In Australia, headline CPI inflation is running at 5.1%, its highest level in 20 years. And yet again, a common theme with economies around the world, and a common action by central banks hiking interest rates to try and tackle high levels of inflation. So yesterday, in the last 48 hours, we've seen a sharp move to the upside in AUD USD, partially because of the increase in interest rates, but also largely down to yesterday's decision by the Fed announced by the Fed that it was less hawkish than expected. So we saw a broad sell-off in the US dollar, hence why we saw such a strong upward move in AUD USD. But the actions of the Bank of England today weakened the British pound so much. One of the currencies that benefited greatly from that was in fact the US dollar. So the overall strength of the US dollar dragged on the AUD USD. So you can see here that a lot of the ground that was gained as a result of the Fed being less hawkish than expected has already been given up, if not entirely given up, because of the rebound in the US dollar today. So we can see here, if you look at the price action, it's been moving sharply lower in the very short term. The more medium to the longer term trend is to the downside as well for AUD USD. Looking at the MACD indicator here, this histogram, which measures momentum, we can see the momentum has swung from positive territory to negative territory, indicating that the bears are in control. Looking at the RSI here, we can see the market has been moving lower here. We can see the market's been moving lower here, also suggesting the price bias is to the downside. While we continue to hold below these three simple moving averages, the 20-period moving average, the 50-period moving average, and the 100-period moving average, it's likely the recent downward trend will continue. Moving lower from here, we could target 0.7229, the lows of this week. And if we break below that, we can then be targeting 0.70, and then below that we'll be looking down towards 0.68 and also down towards 0.69, 0.68. Coming on now to silver. Silver's seen a lot of volatility recently. Silver is largely an industrial metal. It has quite a few industrial uses. So one of the kind of issues that's been hanging over silver the last few weeks is that all this talk of a global slowdown has also fed into the mindset that the global economy does slow down. The appetite and demand for minerals and metals will decline. We currently have a lockdown in Shanghai, one of the largest cities in China, China being a major importer of minerals. So that the kind of concerns that the global economy is going to slow down, demand will fall, therefore demand for metals will fall. That's been a factor. Silver, like other commodities, is traded in US dollar. So the actions and the movements of the US dollar typically greatly influence the price of silver. This time last week, the US dollar index, the dollar itself, hit a 5-year high. And it's no coincidence that we saw a sharp decline or weakness in silver last week when the US dollar was quite strong. It's also no coincidence that when the Federal Reserve issued a less hawkish update than expected, we saw a decline in the US dollar. The weakness in the US dollar prompted a sharp upward move in silver. Partially for two reasons going on here. Silver, you could argue it had lost so much ground, it was becoming relatively cheap. So bargain hunters are often looking to step in, but they're often only going to step in when they can see a green light. And the green light was given by the Federal Reserve, who issued a less than hawkish than expected update. And with that, the dollar weakened. The softer dollar pushed up the price of silver. But it's worth noting, though, that, like I said, although we saw weakness in the in the US dollar last night. We've seen very much a strong US dollar in the last 7 or 8 hours, and the renewed strength in the dollar has now hit silver. And you can see here that silver has given up nearly all the gains it achieved in the past 24 hours prior to the Fed meeting. So we can see here that although silver enjoyed a rally yesterday, it's worth remembering that the peak that we saw here in silver didn't even get to retest this peak here. So that in itself tells you that silver was a bit weak, because the fact that you have a large decline in the US dollar making silver cheaper, you couldn't even stage a decent rally. So you could almost gauge the strength or the weakness of the market by how much it moves on a day you think it would enjoy a large rally. So some people are thinking, well, the declines in silver weren't really that impressive to begin with, so it's not really a surprise silver has turned over yet again. And with that, silver has fallen below all three of these moving averages. While it continues to hold below these moving averages, it's likely the broader bearish trend will continue. Moving lower from here, we could like to retest the late April lows in a 22.11, and a break below that could take us down towards 21.00, and then of course $20 per ounce will be the next kind of big psychological number to watch out for. Now, it is worth noting though that the lows of silver in the last few hours have yet to retest the very recent lows. So if we can hold above this area here at 22.11, the recent lows, it's possible that this area could form a bit of a foundation. Should that be the case, that could be the kind of the first step towards a rebound. Let's face it, silver is fairly cheap. It's declined a lot in the last few weeks. And keep in mind that the US dollar is quite strong now because of the volatility created by the Bank of England. But let's see what tomorrow brings or Monday brings. If we see a bit of a cooling off in the US dollar, which we could do, because the dollar is up around 0.9% today. If we see a bit of a pullback in the dollar either tomorrow or perhaps on Monday, we could see renewed buying in silver. Now, it's also worth mentioning, tomorrow we have the US non-farm payrolls report. I'll be hosting a webinar then, so feel free to sign up for that. But in relation to silver, if we can manage to hold above, if we do manage to find a bit of a support zone in around here, it's possible the short-term upward move will continue. If we do rally from here and we take out yesterday's peak, we can then potentially target this area here at 23.54, and a break above that could see a target this zone here around 23.91. Coming on now to the UT100. The UT100 has seen a huge amount of volatility recently. It's definitely been one of the more volatile stock markets. Why is this? Well, all the talk about higher interest rates in the US has influenced US government bond yields, and the movement of bond yields can often be interpreted as a forecast for what the Federal Reserve are going to do. So we've already seen an increase in government bond yields in the last few weeks and months, and as of last night, we have the confirmation that the Federal Reserve hiked interest rates by 0.5%. Now, when the cost of borrowing goes up, any individuals or companies that have debt, their interest payments are going to get higher. And broadly speaking, the tech sector, compared with say traditional sectors such as retail, for example, broadly speaking, the tech sector has a high level of debt. I know some companies out there like Apple have huge, phenomenal cash balances, but by and large, the tech sector is relatively heavily indebted, and therefore, if we continue to see further interest rate hikes from the Federal Reserve, and the cost of borrowing in the US continues to rise throughout the year and into next year, that the interest payments are going to be higher, and it's going to hit hardest the companies at a high level of debt, tech sector. So we can see that the losses that we've witnessed in the tech sector in recent weeks have actually probably arguably been bigger than losses we've seen in say retail or aerospace, for example. So looking at the price action in the last few days, we saw here that the very recently, only a few days ago or early this week, the UT100 fell to its lowest level in about 1 year or even 13 months, back to a level last seen in March last year. So we're talking basically, we recently hit a 13-month low for the on the UT 100. 13-month low here only a few days ago on Monday. We've had a rebound. Once again, the rebound that we did have last night as a result of the Fed being less hawkish than expected, it wasn't even that impressive. Sure, it just about exceeded this peak here, and it didn't even clear this consolidation zone here. And then, of course, with the kind of overall fears that the US economy is slowing down, the fears about the health of the UK economy, that's dragged the market lower again. Once again, we're seeing a similar scenario here. The market was jolted higher because of the Fed were less hawkish than expected, and yet sentiment was turned around again quite quickly. So we've actually back below the pre-Fed lows, which really says a lot. We can see that we're below all three simple moving averages, so it's likely the more medium-term bearish trend will continue. Moving lower from here, we could target 12,710, the recent lows, and then below that, we've been looking down towards 12,500, and then going below that down towards 12,300, and then of course 12,000 itself will be the next big level to watch out for. Now, if we can manage to hold above the recent lows here, if you can't manage to get a hold above 12,710, once again, it's possible that this entire zone here, this entire region here, might act as support. So we could have a bit of a support zone come into play somewhere kind of in around here. That's possible. The lows that were set here, we're not too far away from the lows that were set here. The lows that we posted in the last few hours are not too far away from the lows that were set here. If we can find a bit of a support zone here in around 12,710, 12,750, it's possible we could see a bit of rebound. And if we do stage a rally from here, where can we target? Well, the first area I'll be looking out for is this moving average here, the 100-period moving average. Once again, this is a 4-hour chart I'm looking at. And if you follow this moving average around, you can see it acted, almost like a textbook example of a market running into resistance at a moving average and then turning lower. So active resistance here, it acted resistance 2 occasions here, it acted resistance here, and active resistance here. So there's 1, 2, 3, 4, 5. Let's call it 6 occasions. There's been 6 occasions, basically in the past month, since early April, that the 100-period moving average on the 4-hour chart has acted as resistance. Now, what I often say is a metric that has been of importance in the past is more likely to be of importance in the future, although there are no guarantees. So if I've made this observation that the 100-period moving average has acted resistance about 6 times in the past 4 weeks, chances are other traders will have as well. So if we do see a rebound in price, it's possible the market could rally all the way back up to that moving average, only to turn lower yet again. Or it's possible the market could rally up to that moving average, have a bit of a pause, and then break above it. And this is obviously why trading is hard, because we don't know which way the market's going to go. We can just kind of, make kind of educated guesses, as it were, about where the market is going to go. The fact it's actually resistance 6 times suggests that is a fairly important and significant metric. So if we do break above it, that itself will be significant. So if we do break above this 100-period moving average, which comes into play at 13,524. If we break above that metric, that'll be fairly significant. And if we break above that, we can then be looking at targeting this zone here around 13,860. And if we go beyond that, I'll be looking up towards these peaks here, and they come into play in around 14,300 thereabouts. I got a couple of requests here. So one of the requests was already for the Nasdaq. So hopefully everything I've already mentioned in the Nasdaq 100 has already been covered. I got a question here for Euro, Yen, and then also the US 30, the Dow Jones. So I'll take a look at those in a second now. I'll start off with the US 30 just because I have the charts already here, and I'm already kind of in the mode for US stock markets. 449. So if you take a look here at the price action of the US 30, notice how it was from a peak here in late-ish April, and it endured a fairly large sell-off until early this week. It enjoyed a sharp rally yesterday in the wake of the Fed being less hawkish than anticipated. Notice how the market cleared all three of these moving averages. Notice how the peaks that we saw here comfortably cleared the peaks that were set here and here. So things until a few hours ago were looking quite optimistic for the US 30, and then with the overall sell-off and the sharp turnaround in the sentiment and the aggressive declines we've seen in stock markets, both in the US and here in Europe, you've seen the US 30 fall below essentially the pre-Fed level. So it's in a similar situation to what we saw on the UT 100. So just compare the price action to the two charts. I quickly flicked back to the UT 100. The UT 100 enjoyed a rally here, and then it moved lower, whereas and the US 30 enjoyed a rally here and then moved lower. The reason why I'm talking about these two charts being right beside each other is because one of the aspects of technical analysis that I really like is called Dow Theory, named after Charles Dow. The Dow Jones was named after him. One of the kind of principles of Dow Theory is that the averages must confirm each other. What that essentially means is markets that are quite similar to each other should, in theory, move in a similar direction at the same time. So if we're seeing one US stock market, in this case the US 30, enjoy a sharp rally in the last few days and then in the last few hours see a dramatic fall, in theory, we should be seeing something similar with another US stock market and even stock markets in Europe and in Asia. And this is precisely what we're seeing. We saw a sharp rally in the UT 100, the Nasdaq 100 yesterday, and this time yesterday, and since then we've been moving aggressively lower. So what that means is, if you've taken one view, if you're going to be trading the Dow Jones, it's worth your while keeping an eye on what's going on with the UT 100, and it's also worth your while keeping an eye on what's going on with, say, the S&P 500 and the FTSE in London and the DAX in Germany and the Nikkei 225 in Japan. Broadly speaking, stock markets tend to move they all tend to kind of rise and fall kind of at the same time. Not always, but you can be more confident of the view that you have. If you're, for example, taking a short position on the US 30, if you're seeing the US 30 move lower, and you're also seeing other US stock markets and European markets and Asian markets also move lower, you can then be more confident of that view. But when you see divergence between stock markets, one stock market in the US is moving aggressively lower while all the rest are moving aggressively higher, that could be a sign something is up. It can also be an indication that if you don't get that confirmation, i.e. the averages moving together, you shouldn't do the trade. That's if you abide by or go by the principles of Dow Theory. Back to the Dow Jones, we're moving aggressively lower. It's a similar situation to what we're seeing in other stock markets. While we continue to hold below these three simple moving averages, it's likely the very short-term bearish trend will continue. Looking at the monthly indicator, we can see that there's a sharp decline in positive momentum. So the bulls are running out of steam, suggesting markets are moving lower. The RSI is moving lower, the relative strength index, indicating the price bias is to the downside. If you continue to move lower from here, we could to retest the recent lows of 32,449. And a break below that, next big level to watch out for will be 32,000 itself. If, on the other hand, though, we do see a rebound, where would I be looking to? Well, in terms of first and foremost, I'll be looking to yesterday's peak, which came in around kind of just north of 34,100. It's in around 34,107. If we can manage to clear the peak from yesterday, I'll then be looking up toward this zone here as the market was falling off. So this is going to last bit of a point of resistance here around 34,794. And some of them are asking about euro yen, which I'll take a look at now. Euro sterling, euro yen. To be fair, it's a currency pair I don't look at a huge amount. So if you just bear with me 1 second. So the longer term view for euro yen has been basically since March of this year, we've seen an aggressive move higher in euro yen. In fact, I'm pretty sure this was a multi-year high that was set only a few weeks ago. Yeah, the highs that we saw in euro yen were back up to levels last seen in 2015, August 2015. So basically 7-year highs were posted in euro yen. So this peak here was a 7-year high. So the really big picture view for euro yen is to the upside. We had a 7-year high only about 2 weeks ago, 2.5 weeks ago. Now, whenever you have a prolonged rally and a very aggressive rally, don't be surprised if you see a move to the downside, which is what we saw here. Although we traded below all three of these moving averages, notice how the lows that we set here were still well above this the lows, or this kind of support zone here. So the lows that were set here were still above these lows here. So the kind of much broader upward trend is in effect. Since then, we have been moving higher. You know, we can see here that although we've been trading in a fairly small range, the euro yen rather is still holding above these three simple moving averages. It's worth noting that the lows that we've seen in the last few days, this is a very crude trend line. The lows that we've seen in the last few days here are still comfortably above this low here. So the market is moving higher. So it's in a bit of a range bound situation at the moment. To be perfectly honest, I'll be looking at euro sterling and saying to myself, until we actually break above this area here, until we break above this area, I might I'll have a more bullish view on euro yen if we actually broke above this, because we're currently trading in a fairly tight range, and ranges can last a few hours, days, weeks, months. It's hard to tell, but the longer term view is to the upside. If we continue to move higher from here, I'll be looking toward these peaks here, which come into play in around, well, just shy of 138. If you break above 138, that can then take us up towards 139.20. Beyond that, up towards 140. So they're the levels I'm watching out for to the upside. I'll be interested to see what happens to euro yen if and when we break this area here around the kind of 138.20 mark, thereabouts, because it's acted as resistance on a few occasions. And so if you break above it, it will be significant. Like, if you do move below these lows, we could potentially find support down here, which comes into play in around kind of 134.77. If we go below that, we could then probably head back down toward this zone around 134.40 thereabouts. And if we break below this area here, that'll be fairly significant, because this area acted as resistance on multiple occasions. So break below this will be fairly significant, and a suggestion the market is going to go lower. The Germany 30, yeah, sure. I'm just conscious now that we've been going for about 35 minutes. Happy to take a few more questions, but if you do have any more questions or any charts you want to look at, please type in as soon as you can. Going back to Dow Theory, I talked about how, if you look at the price action, 749. Going back to Dow Theory, I talked about how the price action we saw here on the Dow Jones, for example, had an aggressive move higher here and then a sharp move lower. Similar situation with the UT 100, the Nasdaq 100. And if you take a look at the price action in the DE30, the DAX, very similar situation. We had a sharp move to the upside this time yesterday. We cleared this peak here. We're back up to around the 2-week high, setting a multi-week high. Really kind of highlights how bullish the recent upward move has been. But since then, what have you seen? An aggressive move lower. Exact same situation as the Dow Jones, exact same situation as the UT 100, the Nasdaq 100. Once again, Dow Theory in operation. The averages must confirm each other. They're all moving. Broadly speaking, the price action of the markets is all basically the same. Rallied, say, yesterday evening and falling today. So we can see here the price action. We're off the recent lows of the DE30, but we're still holding below these three simple moving averages. And while we continue to hold below these three moving averages, it's likely a very short-term downward trend will continue. Moving lower from here, we could be looking at retesting this area here. The levels are about the same, in around 13,794. And then if we go below that, we could then be retesting the lows here in around 13,527, thereabouts. Basically, the lows that were set in late April. So looking off of these two areas here, and then of course, if we break below this, that'll be very significant. That'll be quite a big deal, because we then be into the territory of falling back to levels last seen several months ago. Now, on the other hand, keep in mind the more medium-term trend for the DE30 recently has been higher. If you look at the price action here, drawing the trend line, the more medium-term trend for the DE30 is higher. If you can hold above this trend line here, it's possible the more medium-term upward trend will continue. If I do rally from here, the first area I'll be looking out for is this peak here, yesterday's high. If you clear that, I'll then be looking up toward this zone here around 14,372. And then if you go beyond that, that'll be significant. And if you go beyond that, we then be looking up for the highs of late April or late-ish April, just shy of 14,600. Okay, what I'll do is I can see that there's been no more kind of questions coming in. So what I'll do is I'll look to wrap things up there. I would like to thank you for your time and for your patience. I do appreciate you staying on this long. I also want to give a special thanks as well to those who asked questions. From my point of view, it's always much more fun and much more interactive and much more entertaining whenever I have a few questions put to myself, particularly say something like euro yen, a market I haven't looked at in a while. So it's always interesting to kind of get pointed in direction of markets I wouldn't necessarily look at all of the time. Before I go, for anyone who is on Twitter, feel free to contact me on Twitter. I have an account here. My Twitter handle is highlighted here, @dmadden. _ equity is my Twitter handle. So David Madden is my name, and @dmadden, MADDEN _ equity is my Twitter handle. So feel free to contact me on Twitter. Give me a tweet, say, what do you make of euro yen, or whatever it might be. And obviously, for compliance reasons, like with today's webinar, I can't actually give you any explicit advice. I can't, or I won't give you any explicit trading advice or any investment ideas. But what I can do is I could do what I did in today's webinar, whereby I take a look at like a screenshot of a chart. I'll talk about the price action that's going on, talk about potential levels of interest to the upside, talk about potential levels of interest to the downside, and just leave it as, and then the rest is up to yourselves. So if I'll just look to wrap things up there. For those of you that stayed on, I will be hosting a webinar tomorrow covering the US non-farm payrolls. It's a live webinar. That'll be 1:50. It'll be 13:15, 1:15 Nigeria time, 3:15 Kenya time, because the numbers come out 15 minutes. Oh, the webinar starts 15 minutes, 15, before the actual US non-farm payroll report comes out. And as we know, that number comes out 1 hour before the open of the New York stock market. So feel free to sign up for that webinar as well. And if you don't, you can find me hosting another Scan the Markets webinar next Thursday. So I'll look to wrap things up there. Everyone, have a good evening and hopefully have a good weekend.